All right, the union budget is coming up fast, and you know what that means? Every investor is asking the same big question. So in this explainer, we're going to break down a really simple strategy that could help you get ahead of the government's next big moves. And that question is, where should you put your money right now, before the budget drops and maybe shakes everything up? It's the million-dollar question, right? Well, we're going to look at a really clear way to tackle it. Okay, so the strategy we're talking about today is actually pretty simple at its core. It's all about following the money. Think of the budget as a giant treasure map, right? It tells you exactly where the government plans to spend its cash and focus its attention. And this year, that map is pointing straight at three specific sectors. And here they are, drumroll please: defense, railways, and green energy. Now, this isn't random. Think about it. Defense is getting a huge push for modernization. Railways are in the middle of a massive infrastructure overhaul. And green energy? Well, that's all about hitting our climate targets. The point is, when the government decides to pour money into a sector, it's like giving it a massive tailwind. It helps push all the companies in that space forward. Okay, so this brings up a problem that, every investor faces. You might look at this and go, yeah, the whole defense sector is about to boom. But how do you actually invest in that? How do you bet on the entire sector without driving yourself crazy trying to find that one needle in a haystack, that one perfect company? So let's break it down. You've got two choices, really. On one hand, you can try to pick a single stock. But let's be honest, that's a high-stakes bet. It's kind of like putting all your chips on one number. If you pick the wrong company, you could totally miss out, even if the rest of the sector is going to the moon. But on the other hand, you can invest in the whole sector. This spreads out your risk, and it lets you catch that big wave of growth no matter which specific company is leading the charge. Well, luckily for us, there's a brilliant tool out there that was basically invented to solve this exact problem. It's a way for you to invest in a whole sector, literally with a single click. And that tool is called an ETF, which stands for Exchange Traded Fund. Now, the best way to think about an ETF is like a shopping basket. Imagine you want to invest in tech. Instead of going and picking out individual stocks, you can just buy a pre-made basket that has all the best stuff in it already. That's an ETF. It's a basket full of stocks from one sector, and you can buy and sell the whole basket just like a single stock. Super simple. And that is the magic of it, right there. With just one transaction, one ETF purchase, your money is instantly invested across dozens of companies in that sector. You basically become a part owner of the whole industry. Okay, theory time is over. Let's make this real. We're going to look at some actual ETFs you can check out for those three big sectors we talked about: defense, railways, and energy. First up, defense. A great one to look at is the Motilal Oswal Nifty India Defense ETF. It's pretty straightforward. Its whole job is to track the biggest and most important defense companies in India. And get this is what makes it so cool. One single unit of this ETF costs around 80 rupees. Seriously, for less than what you'd pay for a movie ticket, you can own a piece of the entire Indian defense industry. How amazing is that? And again, the real power here is that diversification. You buy one unit, and boom, your money is spread out across all the big players. You're not trying to pick the winning horse anymore. You're betting on the entire race. All right, next up, railways. For this, there's an interesting one called the Grow India Railways PSU ETF. Now, this one's laser-focused on the big government-owned companies, the PSUs, that basically are the Indian railway network. And if you thought the last one was accessible, check this out. One unit of this railway ETF is only about 30 rupees. 30! I mean, that's just incredible. It means pretty much anyone can get in on this massive infrastructure story. So what's actually in this basket? Well, it's full of names you'll definitely recognize. You've got IRFC, which handles the money side of things. You've got IRCTC, yep, the one you book your tickets on. And then you have companies like Icon, which builds all the tracks and bridges. It's the whole shebang. And finally, let's talk about our third big sector, energy. To get a piece of this absolutely massive industry, you could look at something like the Motilal Oswal Nifty Energy ETF. You know the drill by now, right? The idea is exactly the same. This ETF gives you exposure to the whole energy spectrum, from the big traditional players all the way to the newer companies that are pushing into green energy. One investment and you're covering the whole field. Okay, so at this point, you're probably thinking, this sounds awesome, but is it a huge pain to actually do? And the answer is no, it's actually super, super easy. Let me show you how to get started. Look, you can find these exact ETFs on pretty much any major trading app you might be using, whether it's Grow, Zerodha, Angel One, or Upstocks. All you have to do is open your app, search for the ETF by its name, just like you'd search for any stock, and that's it. So let's bring it all home. What's the end goal here? It's simple. You're trying to set yourself up to profit if one of these entire sectors gets a big boost from the budget. And by using an ETF, you're perfectly positioned to ride that wave. And that leaves us with one final question for you to think about. We've talked about 3 huge sectors: defense, railways, and green energy. Now, I want you to think about it. Which one of these 3 do you think is going to have the biggest pop after the budget is announced? Definitely something to chew on as you do your own research. Thanks for tuning in.